48% probability of a March rate hike. That's what I'm seeing on the world implied probability. What kind of jobs number do we need to see to take this number above 50?
Oh, above 50, you just need a strong employment creation. If you want it above 70, you need a strong employment creation plus a pickup in wage growth. Wage growth is the most important number that's going to determine what the Fed does when the FOMC meets in the middle of March.
Well, last week when we had Janet Yellen's testimony to Congress, you were saying the market was underpricing the risk of a March increase. You were saying it should be more to 50, 60% versus the market where they were more 20 to 30. Why did you see that?
Well, I saw it because of the numbers. And I was very surprised when the market took it down to below 30. And that's when I came out and said, no, it should be more like 50 to 60. And yesterday we got to 52. Today we're 48. I think that is where it is based on the numbers. Now, to go higher, they need some assurances that inflation is indeed going to stick around that 2% target. I think they're not worried about employment as such. They're worried about the inflation. And that's where wage growth becomes very important.
Right, and we saw the core PCE today down 1.2% year on year. We're also 5-year break-evens now down under 2%. It doesn't look like that kind of scenario is really playing out.
Yeah, they want to understand better the inflation dynamics, and for that they need to get a better handle on the wage dynamic. You know, I feel sorry for the Fed. There's been so many moving pieces that a lot of the analytical model, especially the historical ones, are simply not as effective as they used to. So they want more assurances on the wage dynamics, and that'll make them feel better about the inflation side.
Is there another answer to the question that I posed earlier when it comes to a March rate hike probability? Could it just be end of the month flows? We saw a lot of euro-dollar selling in the futures market yesterday. Is it just that? Is it really fundamentals, or is it just sort of technical flows?
So it could be, but there were other things going on yesterday that were important. First, there was stability in Germany. The 2-year government bond stabilized, and that's important because, as I argued earlier, it's been putting a downward pressure on our rates. Second, you had clarification from Mr. Kaplan, the president of the Dallas Fed, that sooner rather than later could mean quite soon. And thirdly, the fiscal side. You know, if we're going to increase defense spending, that's easier done than reducing other spending. So I think the market is pricing in what it's hearing.